Special coverage insurance, you may want to consider. Your business will require its own special insurance coverage for the risks inherent in your particular line of business. Sometimes these can be added as endorsements to your policy, or you can buy them separately. Here are a few of the different types of specialty coverage you may consider having a department look at. Profit insurance. Unlike business interruption insurance, which covers future profits, profit insurance covers the loss of goods already manufactured but destroyed before they could be sold. This specialized coverage is aimed at manufacturers. Electronic equipment. Electronic equipment can be insured for fire, theft, malicious damage, accidental damage, mechanical breakdown, or electrical breakdown. A separate electronic data processing (EDP) policy can cover hardware as well as software. Should a fire occur in the computer room, the standard property insurance policy might pay you the price of replacing a blank roll of computer tape. An EDP policy that could compensate you for the cost of reconstructing the data. These items and coverage are above and beyond the normal scope of business property insurance unless you have a comprehensive policy. Money and securities insurance. You may need additional insurance to cover those peak cash holding periods during the business day, such as closing, after lunch, or payday. Check to see if your policy covers money in transit, money or securities on the premises during business hours and after hours, and money at home, when you're just too tired to go to the bank. Consequential losses. This clause should be inserted into a standard insurance property or fire insurance policy. For an extra premium, you can insure the extra expenses of obtaining temporary quarters, relocation, and incidental expenses. Glass insurance. Businesses have the option of purchasing a comprehensive policy insuring breakage of plate glass, neon signs, and showcases from any source except fire or nuclear reaction. This includes weather, riots, vehicles, or sonic boom. Determine whether this coverage includes damage to stock by broken glass. Some policies include the costs of replacing lettering and other ornamentation. Temperature damage. In the same vein, this insurance is needed by businesses such as bakeries, dairies, and greenhouses that require the absolute maintenance of a certain temperature to prevent loss of valuable inventory. Credit insurance. If your business extends credit to another party, person, partnership, or corporation, you could encounter losses stemming from bankruptcy, closure of a financial institution, death or physical disability, destruction of accounting records, political instability in a foreign country. The two major classifications for credit insurance are: 1. General coverage, which applies to those losses incurred during the one-year policy caused by sales made during the year prior to the starting date. 2. Forward coverage, which covers the insured for losses resulting from accounts that were created by sales made during the policy term. General policies account for the lion's share of the credit policies in force. They cover all debtors falling into given classes of credit ratings on a blanket basis. The policy specifies dollar limits on debtors according to classifications set by Dun & Bradstreet Credit Ratings. Various levels of blanket coverage can be assigned depending on the size of the company. Automatic coverage on unrated accounts can also be provided. Care, custody, and control. This is a must for businesses and service industries, particularly those with customer goods in their control anytime during the business transaction. Should an accident happen, the insurance company would reimburse you and your customer. This is especially useful to businesses that provide services such as framing pictures, furniture repair, bicycle assembly, dry cleaning, and so on. Basically, if you have a customer's goods in your control at any time during the business transaction, you're liable for the full value should an accident happen. You're held liable even for the most insignificant handling of the customer's property. Holding and losing athletic shoes while your customer is roller skating is considered an accident. Power interruption. A power interruption endorsement is available on a machinery contract to provide coverage for losses from interruption of electricity, gas, heat, or other energy from public utilities. This is critical for those businesses in the perishable food industry or specialized sectors such as an ice warehouse. Fair Plan Program. The Fair Access to Insurance Requirements (FAIR) plan was established by the Federal Housing and Urban Development Act as riot insurance in the 1960s. You cannot be refused insurance even if your company is located in a crime-prone, high-violence area. The FAIR plan provides coverage for looting, fire, vandalism, building, glass, and inventory if damage occurs during a group demonstration. Surety bonds. A surety bond protects your company against losses incurred as a result of the failure of others to perform on schedule. If you're familiar with the construction industry, you know the importance of this insurance contract. Surety bonds, otherwise known as performance bonds, guarantee that a person or corporation will perform the service agreed on. The bond guarantees that you have the financial capacity to perform your duties, and it also backs your credit. Because your work is guaranteed, you're able to compete and bid on jobs with firms that are considerably larger than yours. Keep in mind that surety bonds may require extensive credit information and collateral. Fidelity bonds. Fidelity bonds protect the firm from losses incurred by employee thefts. It is often difficult to establish losses, and only established losses are reimbursed. These bonds have been used to cover cash losses rather than merchandise losses, even though it's well known that losses from stolen merchandise far exceed those from cash losses. If applicable to your business, fidelity bonds should be used more widely to cover losses of both cash and merchandise. Water damage. Different than flood insurance, water damage insurance covers risks from leaking pipes, sprinkler systems, backed-up toilets, bursting water tanks, and a leaking roof. Transportation. Transportation insurance indemnifies your materials in transit. Common carriers like United Parcel Service are liable for most shipping damages to your goods. They are not liable for unforeseeable acts of God such as floods or lightning. Land shipments most frequently use an inland transit policy. This would include a train derailment but exclude a labor strike or riot. Also excluded are breakage and leakage. However, the common carrier is generally liable for these damages. Truck shipments can be covered by a blanket motor cargo policy. Federal interstate trucking laws require minimum coverage that may not offer you full protection. Rain. Rain insurance is designed to cover losses at a certain percentage, for example, 60% of the gross revenues on the last day not affected by rainfall. Swap meets, carnivals, auctions, and sporting events would consider this coverage. Title insurance. Title insurance is available for a nominal fee and should always be requested for real estate purchases. In cases in which the title is not conveyed, even though the purchasers thought they had such a title, they are reimbursed. Fair Plan Program. The Fair Access to Insurance Requirements (FAIR) plan was established by the Federal Housing and Urban Development Act as riot insurance in the 1960s. You cannot be refused insurance even if your company is located in a crime-prone, high-violence area. The FAIR plan provides coverage for looting, fire, vandalism, building, glass, and inventory if damage occurs during a group demonstration. Business interruption. This specialized insurance reimburses the business owner for future profits lost and fixed charges as a result of damages due to perils specifically accounted for in the policy. Weather damage is the most common cause. Other causes, for example, a labor strike or material shortage, are not covered. The inclusions, for example, tornado, hurricane, and exclusions, for example, mudslide or tidal wave, differ, depending on your geographic location. Predicting a company's profitability at a particular point in the future can be tricky. If the company was operating at a loss, then only the fixed expenses that it incurred may be reimbursed. However, if your company is operating at a profit, then good records, which underscores the importance of keeping duplicate records at another site, will support your case. If all the records have been destroyed in a fire, the previous year's tax records can help. Business interruption coverage is particularly crucial for restaurants, as they risk the complete loss of income in the event of a fire while still being obligated to make rental and loan payments.